So yesterday we were talking about week skills for 14, page 2. Now we're going to move on to skills 15, page 1. So you have done a great job learning about expenses and how to maximize profit by calculating fixed and variable expenses. We have also learned about the importance of saving and setting saving goals. So we've already talked about fixed and variable expense. Remember, a fixed expense is something that does not change, such as the rent or a car payment. But a variable expense is something that changes based on how much we use it. So for example, gas or even light or water, that is dependent on how much we use. We have also learned about the importance of saving and setting saving goals. Now, where will you keep the money you have earned to make sure it's safe? People use financial institutions such as banks. So that's something I want us to make sure that we underline here. Let's go ahead and do that. Put shapes and put my green. So a financial institution such as banks, credit unions, and credit card companies, and mortgage companies for many different reasons. Some people have extra money to save and others need to borrow money. Financial institutions help their customers meet the variety of needs by offering different types of accounts and services. Okay, let's continue. So it says banks and other financial institutes are a great place to keep your hard-earned money safe. They also lend you money and extend credit with the expectation that you pay back the money you borrow with interest. Let's go ahead and highlight that right there with interest. So this is the idea of a bank right here. So banking begins. The word bank, so trying to learn how this bank word came about, but it's from an Italian word called banco, which means bench. This is because historically, the lenders sat on a bench in the market waiting to do business with others. They would save money for other people and even pay them interest in return. What else can you find out about the history of the first financial institute? What were some of the first financial institutes in your city or town? Financial institutions offer customers a safe place to keep their money. You can use a savings account to keep your money safe while earning interest at the same time. You don't need a lot of money to open a savings account, and you can withdraw your money at any time. A bank will utilize the money of multiple depositor accounts to lend it to its borrowers. When you keep a savings account in a bank, the bank pays you extra money for every dollar deposited. What does it mean to deposit? That's right, to add money to your bank account. This money is called interest. The bank will pay interest on a regular basis for as long as you keep the money in your savings account. So let's talk about some financial terms. So let's talk about interest. So we're talking about interest when it comes to savings. Let me go ahead and erase that really quick. We're talking about interest when it comes to savings. It's an amount of money paid regularly by a financial institute. So what's an example of financial institute? That's right, a bank, for the money that you deposited. So in other words, they pay a regular amount by helping hold your money. So now we have interest when it comes to a loan. What does it mean to loan? Or to, like, can you loan me $5? Can you loan me $1,000? What does it mean to loan somebody something? So a loan is additional money borrow pays for someone else's money. So for example, if I want to take some money out that I don't have right now, I would go to the bank and ask for a loan. When they give me that loan, they tell me, okay, you're going to have to pay this much money plus interest, meaning an additional charge. So an additional money borrowers pay for using someone else's money. Because I'm going to use somebody else's money, so I have to make sure I pay that back plus a little bit more. Savings account. An account used to deposit and save money at a financial institute such as a bank or credit union. So for example, for me, I'm using it as an example. I have a savings account and I have my regular account. So in my savings account, I try to put as much money as I possibly can into that one because I'm trying to save for myself. While the money I keep in my regular account, I leave it there for any transactions that I have to complete or anything I have to pay for, such as groceries or gas. Now let's talk about a deposit. So the sum of money put into a bank account. Remember, a deposit is something we add to the bank. Now, a withdrawal, take out money of a bank account. So think about when you go to the ATM with your parents and they go to withdraw money, meaning they're going to take some of their own money out. Remember, this is not considered a loan because we're not borrowing somebody else's money. They're just taking away their own. So for example, if I need $20 to pay for something, I'm going to go to my ATM and take out those $20 that I already have in my account. A bank, credit union, and savings and loans are examples of financial institutions that are in businesses to provide services such as, so for loans, money is loaned to people by a financial institution. People may borrow money for different reasons, some of which include buying a car, which is known as a car loan, buying a home, which is like a mortgage loan, starting a new business or going to college, etc. So for example, again, for me, I did have to take out some loans for college. Why do I have to take out a loan? Well, because I have to make payments on stuff that I need to do right away. So tuition could be expensive. So tuition for me was about $3,000. I didn't have $3,000 just to give one semester. So I had to borrow money or take a loan. Now that I've already graduated and I'm teaching and I'm working, I'm going to pay back that money that I got to borrow. So if, for example, I'm still going to pay that same amount, but now I have to pay it back to the bank for letting it lend me money. Now for financial accounts, checking accounts, saving accounts, certificates deposit, which is a CD, and credit cards or debit card services. So these are financial accounts. So banks are in the lending business. If people don't have enough money saved up to buy something, they borrow money from the bank. In this case, the bank is the lender, meaning they're the ones that are going to lend the money. Why might a person need to borrow money from a bank? So again, we talked about buying a car, we talked about maybe buying a house, trying to get money that we don't have right there and then that we can do later. Banks acquire money to lend by getting it from other people who open savings account and other types of accounts. If people would not put their money in banks, the banks would have less money to lend. The money that banks get from savings and other accounts is combined and used to give loans. The money doesn't belong to the bank's owner. It belongs to all the people that have their money in the savings or other accounts held at the bank. The bank lends money but expects people to pay the money back, plus pay extra. Now remember, this extra is also going to be considered the interest. So it says the bank lends money but expects people to pay the money back. For example, my loan for going to college, I have to pay that back, plus extra money for the loan received. So again, this is called our interest. So again, this is additional money borrowed. Borrowers pay for using bank money. So here I want you guys to focus mainly on these three right here: financial institution, deposit, and savings. So it says established that deal with financial transactions, services such as banks, savings and loans, credit card unions, and mortgage companies. So it says give a real life example or draw a picture to represent each term. So here we're trying to look for a financial institution. So I want you to give me a sentence or draw me a picture of a financial institution. It could be any of these. Remember, it can be a bank. It could be saving and loan, credit unions, and mortgage companies. You can draw any of those or you can use it in a sentence. Deposit means to put money into a special account with a financial institution, which also known as our bank, such as a bank. So I want you to give me an example in a sentence or to draw a situation where you would deposit money. Savings, money set aside for future spending. So here again, you can give me a sentence or a drawing to represent a savings. So for example, I could use me. I'm trying to save up for a brand new car. So that would be me for my savings. I want you to continue the same thing with savings account. Interest when you're saving money compared to interest when you have a loan. And I also want you to do a loan, something borrowed, most often the sum of money that is expected to be rapid with interest.